CBIZ presents One to Grow On, quick strategies for your business.
Hello, my name is Lance Randolph. I'm a director in the Anti-Fraud Services practice. Welcome to CBIZ. Today I'd like to talk about some of the common fraud schemes we're encountering in our practice as a way of raising awareness for our clients, contacts, and other friends. I do a fair amount of public speaking and anti-fraud training, and one of the things I always talk about is what is the easiest way for an employee to steal from his or her employer. And I'm not talking about back-to-school shopping in the supply closet or adding a few extra miles to an expense report. While technically that is fraud and is very aggravating, those typically aren't bet the company and not even bet the career types of schemes. No, when I'm talking about stealing from an employer, I'm talking about stealing enough money to make it truly meaningful to the employee or truly disastrous for the employer. So what's the easiest way to steal that kind of money? Simple. Have the company write you a check. Now it sounds like a bad joke, but unfortunately the joke is all too often on our clients. Of course, the companies don't know they're writing a check to the premature retirement fund of a trusted employee. That's where the fraud comes in. Typically, a fraudster is able to forge approval signatures or convince a coworker that the payment's for a legitimate business purpose. Often, they'll set up a shell company, get the company on the approved vendor list, and then use that company invoice for obscure items or abstract consulting services. Sometimes, the entire invoice amount isn't even fraudulent. One example is an employee that owned industrial space, then rented that space back to his employer for the legitimate business use. Nothing necessarily fraudulent about that, as long as the rent being charged by the employee/landlord is at fair market value, a detail that can be overlooked by an employee bent on fraud. So if the easiest way to steal money from a company is to have the company write you a check, what's the best way to combat this type of fraud? Well, organizations need to do a better job of understanding who they're writing their checks to. It sounds like a simple concept, but again, too often overlooked. In the industry, we refer to these as vendor validation procedures, and they can take many forms. But with the prevalence of information available on the internet, a lot can be done in a short period of time. Of course, I don't believe everything I read on the internet. But if I can't quickly determine that a company exists, I take that as a bad sign. The best protection is simply check for the basics. Does the company have a working website, a working phone number, a street address? Is the street address in a residential neighborhood? Does the street address happen to be an address of an employee? Is the company registered with the Secretary of State? Is the registered owner actually another employee? Of course, these aren't the end-all be-all of anti-fraud procedures. But by taking these minimal steps, organizations can do a better job of understanding who they're writing their checks to and combat this common fraud scheme. The second scheme I'd like to talk about is one we encounter almost as frequently, but sadly can't do anything about: counterfeit checks. Now, counterfeit checks don't typically involve enterprising employees or other insiders, but can be absolutely as devastating. Basically, counterfeiters are able to get their hands on an actual check, typically from stealing it out of the mail, and then use that check to create fake checks. The most devious part of the scheme is that the counterfeiters then don't take those fake checks and deposit them into their own accounts. That'd be too easy to investigate. Instead, they'll use those fake checks as negotiable instruments to settle legitimate third-party debt. For example, I had a client that sent a $300 check to a vendor in Canada. The vendor never received the check, so we can only assume it was stolen from the mail. The counterfeiters then used that $300 check to create fake checks with my client's bank account information and use those fake checks to buy tens of thousands of dollars worth of used equipment. The equipment dealer, unfortunately, accepted those apparently legitimate corporate checks as payment in full for the used equipment and let the equipment leave his premises. Everything was fine for the dealer when he took those checks to his bank, until my client's bank called his bank to inquire about third-party checks deposited 2,000 miles from where my client normally does business. Fortunately for my client, the funds never left their account. The equipment dealer, however, was not so lucky and was stuck holding fake checks as payment for legitimate services or goods sold. That wasn't the end of the story for the counterfeiters either. In a period of about 2 weeks, my client's bank account was presented with 4 checks totaling over $100,000, all based on that same $300 check originally mailed to Canada. This scheme is running rampant right now. We get about a call a month from organizations that are victimized by this kind of activity. Unfortunately, it's typically after the funds have left their account. There's not much that can be done after the fact. Counterfeiters who are targeting corporate accounts are typically part of organized rings, often based internationally, and the players are long gone before anybody realizes the checks are fake. So what can a company do to protect itself against counterfeit checks? A service called Positive Pay. Positive Pay is a service provided by banks, whereby a company sends to its bank a file that lists all of the checks it's issuing and in what amounts. That way, if an altered check is presented to the bank knows something is amiss because the information on the altered check does not agree to the information submitted by the account holder. The check is refused and the funds never leave the account. CBIZ doesn't offer banking services in its suite of services, so we encourage you to talk to your banker about Positive Pay and who would be liable if your organization's checks were counterfeited and deposited into a third-party account. That concludes my podcast. My name is Lance Randolph. Thanks for tuning in. If you have any questions, please don't hesitate to contact us. Thank you.